There were times in my flying career when we were working through rough weather, heavy rain, turbulence, darkness, and you were completely locked into the instruments. Weather radar up, autopilot managing the airplane, crew focused, everybody doing their job. You're not guessing. You're not reacting emotionally. You're reading the panel, navigating around the worst of it, and staying disciplined until the picture clears. And then, sometimes, you break out the other side. The rain stops, the turbulence settles down, the sun comes back through the windshield, and the whole cockpit takes a breath. That is what Novo Nordisk's Q1 2026 earnings report felt like to me. This is Captain Pierce. Welcome back to SkiesCapital. Today we're running a captain's log on Novo Nordisk, ticker NVO, after its Q1 2026 earnings report. Heading into the quarter, Novo looked like it was flying through serious weather. The market had concerns about obesity drug competition, pricing pressure, growth deceleration, and whether Wegovy and Ozempic could keep carrying this business at the same altitude. In aviation terms, the approach looked rough. But then the quarter came in better than feared. Revenue beat expectations, management raised guidance. And maybe most importantly, the Wegovy pill data landed better than the market expected. Now, that does not mean every risk is gone. Competition is still real. Valuation still matters. And Novo remains one of the most closely watched healthcare stories in the market. But after this report, the investment thesis looks stronger than it did before earnings. So in this captain's log, we're going to check the instruments, the quarter, the guidance, the GLP-1 runway, the competitive threats, and whether NVO still deserves a seat in a long-term quality portfolio. Before Novo reported Q1, I had a very specific checklist because when a company is flying through rough weather, you don't just stare out the windshield and hope it clears. You go back to the instruments. You check the items that matter. And for Novo, there were 5 things I wanted answered after the under the cowling review. The first was CagriSema, and that one is still open. The study is completed, but the FDA timing really has not changed. So for now, this remains a second half 2026 item. It could help rebuild confidence in Novo's pipeline, but we are not there yet. The second item was the actual earnings performance, and this one was answered. The question was simple. Would Novo match, miss, or beat that lowered guidance range? And Q1 came in better than feared. Revenue beat, adjusted operating profit beat consensus, and management raised guidance. That matters because the market was bracing for more deterioration. Instead, the quarter showed the business still has altitude. The third item was compounding enforcement. This is still a monitoring item. The FDA grace period expired, and mass compounding is now technically illegal. But in the real world, illegal supply does not disappear overnight. Novo's own disclosures suggest that some of that supply is still out there. So I would call this partially improved, but not solved. The fourth item was Foundayo, Lilly's oral GLP-1 competitor. This is probably the most important competitive question on the board right now. Foundayo launched in April, and the early prescription data looks better for Novo than many expected. But we need to be careful here. Early data is not the same thing as a final answer. Q2 is the real test. That is when we'll get a better read on whether Foundayo is just a headline risk, or whether it starts to pressure Novo's growth trajectory in a meaningful way. And the fifth item was the volume versus price trade-off. This one is improving. The concern was that lower prices could hurt revenue too much, even if they helped expand access. But in Q1, the volume response looked stronger than expected. Oral Wegovy estimates moved higher, prescriptions looked solid, and uptake from new GLP-1 patients was encouraging. So when I step back from the checklist, here's the cockpit readout. 3 items are answered or improving. 2 are still open. And the biggest item going forward is competition, especially Foundayo's performance in Q2. So the flight path is definitely clearer than it was before earnings, but we are not at cruise altitude yet. Now let's read the gauges, and this is where Novo's quarter gets interesting because the headline number and the underlying number are not telling the exact same story. On the surface, reported revenue looked very strong. Novo reported 96.8 billion Danish kroner of revenue, up 24% year over year or 32% at constant exchange rates. That sounds like a clean beat, but as investors, we have to adjust the instrument before we trust the reading. That reported revenue number was helped by a one-time 340B reversal in the United States. So yes, the headline looked strong, but part of that lift was not recurring. When you strip that out, adjusted sales were actually down 4% at constant exchange rates. That is the pressure point. Pricing pressure is still the main drag on on the business. So this was not a perfect quarter underneath the surface. But then we moved to profitability. Adjusted operating profit came in at about 32.9 billion Danish kroner versus roughly 28.7 billion Danish kroner expected. That is a strong beat. And adjusted EPS came in around $1.04, also ahead of expectations. So while sales quality still needs monitoring, Novo showed it can control costs and protect earnings better than the market expected. Now, the most important gauge on this slide is the Wegovy pill. Sales came in at 2.26 billion Danish kroner, nearly double expectations. That matters because the market was questioning whether Novo still had momentum in obesity care, especially with Lilly turning up the competitive pressure. And Q1 gave us an answer. The Wegovy pill launch is real. Injectable Wegovy was still solid at about 18.2 billion Danish kroner, up 12% year over year, though growth is clearly slowing. Ozempic came in around 27.8 billion Danish kroner, down 8% year over year, but still better than feared. And international operations grew 6% at constant exchange rates, which helped offset some of the US pricing pressure. So here is my cockpit readout. Reported revenue was helped by a one-time item. Adjusted sales still declined, but profitability beat. The Wegovy pill launch was much stronger than expected, and the quarter looked better than the market feared. Novo did not eliminate the turbulence, but the instruments looked a lot better than they did heading into earnings. Now let's move from the individual gauges to the flight log. This is where I think the quarter becomes more encouraging, but still not risk-free. On the tailwind side, the biggest positive was clearly the Wegovy pill launch. This was the strongest ever GLP-1 launch by volume in the US. Novo had roughly 1.3 million prescriptions in Q1, more than 2 million cumulative prescriptions since launch, and revenue of about 2.26 billion Danish kroner. That was nearly double the analyst consensus. So the big question going into the quarter was this: could Novo regain momentum before Lilly's competing oral GLP-1 really gets going? And at least in Q1, the answer was yes. The second tailwind is that the broader Wegovy brand appears to have regained U.S. prescription momentum. The pill and the injectable do not appear to be fighting each other. In fact, the evidence suggests they may be working together. The pill can bring in new patients while the injectable remains a major part of the franchise. That matters because Novo does not just need a product launch, it needs the launch to stabilize the entire obesity platform. Third, management raised guidance. Now let's be clear, this was not a dramatic raise. Novo is still guiding to a decline for the year, but the adjusted outlook improved from down 5% to 13% to down 4% to 12% at constant exchange rates. That may sound small, but direction matters. When a company has been under pressure and cutting expectations, the first upward revision is an important signal. Fourth, international operations grew 6% at constant exchange rates. That gives Novo some diversification. It helps offset U.S. pricing pressure and shows that the recovery thesis is not entirely dependent on one geography. Now, on the headwind side, there are still real warning lights. The first one is adjusted sales. Reported revenue looked strong, but the headline was helped by a one-time 340 billion reversal. Underneath that, adjusted sales were still down 4% at constant exchange rates. So this is not a clean growth story yet. Second, Ozempic was down 8% year over year. It was better than feared, but still under pressure. And Lilly is not standing still. Mounjaro grew 125% in Q1, and Zepbound grew 80%. That is serious competitive pressure. Third, Foundayo is now live. Lilly launched Foundayo on April 9th. Early data shows Novo's Wegovy pill had the stronger start, but I would not declare victory after a few weeks of prescriptions. This race is just beginning. And finally, U.S. pricing remains the biggest structural issue. Lower realized prices, Medicare dynamics, and broader price resets are still part of the story. That pressure did not disappear because one quarter came in better than feared. So here is the ledger. For the first time in several quarters, I see more green than red. The quarter improved the thesis, but it did not clear the thesis. Novo is flying better than it was before earnings, but the warning lights are not off yet. Now we move to the forward radar, because one good quarter does not complete the flight. It just gives us a better heading. For Novo, the next 2 or 3 quarters are going to tell us whether the Wegovy pill recovery is real, durable, and strong enough to offset the pressure in the rest of the business. There are 5 waypoints I'm watching. The first and most important is Wegovy pill prescription momentum in Q2. Q1 was a strong start. Weekly prescriptions were already running above 200,000, and Novo has reported more than 2 million cumulative prescriptions since launch. but Q2 is the cleaner test because Foundayo will be in the market for the full quarter. So the question is simple. Does Novo maintain a clear prescription lead, or does Lilly start closing the gap? The second waypoint is the CagriSema FDA decision. This matters because Novo needs more than one major obesity asset. If CagriSema gets approved, even without clearly beating tirzepatide, it could still restore pipeline credibility and give Novo a second important GLP-1 based asset in obesity. But a rejection would be a real negative. The third waypoint is the Medicare GLP-1 bridge. Starting July 1st, 2026, eligible Medicare patients are expected to gain access to Wegovy injection and pill at a $50 monthly copay. That could be a volume tailwind, but there is a trade-off. Novo has to prove that expanded access and higher volume can absorb lower realized prices and broader price resets. The fourth waypoint is Foundayo's prescription trajectory. Early data suggests Lilly's oral pill started slower than Wegovy pill, but this is not a race you call after a few weeks. What matters is the ramp rate through Q2 and Q3. Does Foundayo stay slow, or does Lilly's commercial machine start to close the gap? And the fifth waypoint is the 2026 revenue floor. Novo raised guidance, but the company is still guiding to a decline. So the question is whether the business keeps moving toward the better end of the range, closer to down 4%, or whether pricing pressure pushes it closer to down 12%. That matters for valuation, because if Q1 marked the trough, the stock may deserve a better multiple. But if Q1 was just a temporary bounce, then investors need to stay cautious. So my captain's watch list is simple. Oral Wegovy versus Foundayo is the key contest, and Q2 prescription data is the next true test. Now we get to the valuation check, and this is the key question after the earnings beat. Does the price still make sense? Because the stock moved higher after Q1, but valuation is not just about whether the stock is up or down. It is about what the market is paying for the cash flows, the growth, and the risk. Before earnings, Novo was trading around $42. After the report, it moved closer to $47. So the stock is no longer quite as cheap as it was before the quarter. But when I look at the instruments, it still does not look expensive. On forward earnings, Novo is trading around 13 to 14 times forward earnings. Historically, this business has often traded at a much higher multiple, closer to the mid-20s, or even higher during periods when the GLP-1 growth story was fully trusted. So even after the post-earnings move, the market is still pricing Novo like a company with problems. And to be fair, it does have problems. Adjusted sales are still declining. U.S. pricing pressure is real. Ozempic is under pressure, and the pipeline still needs to prove itself. But the important point is this. The valuation already reflects a lot of that concern. On EV over EBITDA, Novo is still trading at a meaningful discount to where it has traded historically. On free cash flow, the business still generates real cash. In the first quarter, Novo reported 12.8 billion Danish kroner of free cash flow, up from DKK 11.3 billion last year. So this is not a speculative biotech story. This is still a highly profitable, cash-generative global pharmaceutical company. The peer comparison is also important. Novo is trading at roughly 13.5 times next 12-month earnings, while Lilly is closer to 26 to 27 times. That means the market is effectively saying Lilly is the clear winner, and Novo deserves a major discount. Maybe that is right. Lilly does have stronger momentum and a stronger pipeline perception. But if the Wegovy pill volume story holds, then that discount may be too wide. So here is my SkiesCapital verdict. Post Q1, Novo moves from cautious watch to potentially attractive. Not a clean buy, not an aggressive buy, but potentially attractive. The quarter reopened the growth narrative, but U.S. pricing pressure, Ozempic decline, and the thinner pipeline still keep me from calling this a cleared thesis. For me, the right posture is a starter position or adding patiently on dips, not chasing aggressively after one good quarter. The valuation is attractive, but the next 2 quarters still have to confirm the flight path. Now we get to the practical question. At what price does Novo Nordisk become worth boarding? Because after Q1, the thesis improved. But that does not mean we ignore valuation. The stock is trading around $47, which puts it right in my fair value zone. not expensive, but also not a screaming bargain after the post-earnings move. So I would break NVO into 3 boarding zones. The first zone is $43 to $49. That is what I would call fair value, or a watchful ad zone. At that range, using a 2026 forward EPS estimate of roughly $3.60, Novo is trading around 12 to 14 times forward earnings. For a business with an 81% gross margin, a 39.3% return on invested capital, and one of the strongest GLP-1 franchises in the world, that is still reasonable, but it is not risk-free. Adjusted sales are still declining. U.S. pricing pressure is still real. Ozempic is under pressure, and the pipeline still needs to prove itself. So in this zone, I would not be aggressive. This is more of a starter position or slow add area. The second zone is $36 to $43. That is where NVO starts to look more attractive. At those prices, the forward PE drops closer to the 10 to 12 times range. The free cash flow yield improves, and the market is giving very little credit for the quality of the business. That is the zone where I would say the runway is in sight. The business still has issues, but the valuation starts giving you a better margin of safety. And then the third zone is below $36. That is the compelling zone. At that point, the market would be pricing Novo at less than roughly 10 times forward earnings, despite the company still having exceptional profitability, strong cash generation, and one of the most important obesity care franchises in the world. Now, to be clear, a price below $36 would probably mean the market is worried about something. Maybe Foundayo is gaining traction. Maybe pricing pressure is worse than expected. Maybe CagriSema disappoints. So you still have to check the instruments. But if the business fundamentals remain intact, that would be the zone where the margin of safety becomes much more attractive. So my conclusion is this. At around $47, Novo is still reasonable, but I would not chase it aggressively. Between $36 and $43, it becomes attractive. Below $36, it becomes compelling. Assuming the thesis is still intact, the valuation is cheap versus history, but the next few quarters still need to confirm that the recovery is real. Now we bring this in for final approach. My conclusion on Novo Nordisk after Q1 is pretty simple. The approach opened up. This was not a perfect quarter. Adjusted sales are still down. U.S. pricing pressure is still real. Ozempic is still under pressure. Lilly is still a serious competitor. And Novo still needs more pipeline credibility. But Q1 gave the thesis its first real lift in several quarters. The Wegovy pill landed better than the market expected. Novo reported about 1.3 million prescriptions in Q1, more than 2 million since launch, and weekly prescriptions were already above 200,000 by mid-April. According to Novo, that makes it the strongest ever GLP-1 volume launch in the United States. And that matters because this is not just about one product. It is about whether Novo can regain momentum in obesity care before Lilly's oral competitor gains altitude. And in Q1, Novo showed it still has real runway. The company also raised guidance. Adjusted operating profit came in ahead of consensus by roughly 14%. And at around 13 times forward earnings, the valuation still looks attractive relative to Novo's own history and relative to Lilly. So my captain's call is this. The thesis is improving. The valuation is attractive, but the posture is still add on dips, not chase aggressively. I want to see Q2 prescription data. I want to see whether the Wegovy pill holds its lead against Foundayo. I want to see whether volume growth can keep absorbing the pricing pressure, and I want to see progress on CagriSema. So Novo is not fully cleared yet, but after Q1, the cockpit looks a lot better than it did before earnings. The approach opened up. If this helped you think more clearly about the business, hit like and follow for more calm, disciplined investing analysis. This is Captain Pierce. Think clearly, invest better. Captain's log out.